Hi, welcome to Penser Bank and our interview with Maha Energy. My name is Markus Almerud. I'm an analyst here at the bank. So I with me Paulo Mendonca, who is CEO at Maha. A warm welcome to you.
Thank you very much, Markus. Pleasure to be here.
So you released a Q1 just a couple of days ago, a transitional quarter, not much in the quarter itself, but there's lots of other things going on. You have completed the sale of Maha Brazil. You just closed the DBO transaction this morning. Let's start there. What does DBO bring to you?
Oh, perfect. Good morning, everybody. So the transaction of DBO is something very important for this new Maha. It brings not only a diversified production of oil in the Papa-Terra field, but also of gas in Peru, and they also come with a cash flow stream. If we look to those assets that have been producing for a while, so they bring here stable and cash flow stream to Maha. Remembering that those assets, all the infrastructure is owned by the consortium. So this leads to higher margins, as you don't need to pay any leasing rates for the FPSOs and all the platforms. So the transaction of DBO is an important step of bringing resilient revenues to the company. And remembering that we basically, during the last 6 months, we had with Tia and Tartaruga around 2,000 barrels of production. Mm-hmm. And now we have divested those assets for a value of up to 186, and we acquired basically the same production for a much smaller value on a very accretive transaction to the shareholders.
So you basically done an asset swap. You take production from what you had before, you replace it with this production, and then you get the cash in from the sale that you've had, and you pay with shares for the new assets.
Correct. I think that the payment in shares provides also a solid capital structure for the company. So today we have the same production we have EBITDA generation, and we have a substantial cash position that will allow the company to pursue M&As, which is our main goal here.
And if I look at Papa-Terra and Peru, so look at production levels, you took a big step up in April. So you went to basically up to the same level where you were before, but it was a big ramp up. Should we expect more? Should this trend continue? What are you seeing?
No, perfect. I think in the first quarter of this year, Papa-Terra had a maintenance program, so the production dropped, but then in April it restored. So basically the production of April was supposed to be the same of January. And now the operator, together with its partners, they are working in a program of increasing production. So yes, we do expect a ramp up in this production. According to the illustrative certification of reserves and development plan, Papa-Terra today produces around 17,000. And the expectation is to increase it around 80%, or almost reach around 30,000 barrels through new wells and intervention in current wells.
If I take Papa-Terra and Peru and I compare them with the T field and Tartaruga field, so the T field and Tartaruga you were drilling a lot, right? Would you say that Papa-Terra and Peru is in a different phase? That is, it's a ramp-up phase rather than a drilling phase, and hence the risk is lower, or is the risk profile similar in the two?
I think very good question. I think the risks are different. I think Tia and Tartaruga they presented an onshore risk of for instance pricing of the sale of the oil. In Papa-Terra we export this oil, so we're not linked to the domestic market. So in terms of pricing, Papa-Terra and Peru are less dependent on current oil prices in the Brazilian environment. Regarding the reserves and production, I think both assets, they have all the infrastructure ready there. So Papa-Terra and Peroá, they do have a capex program to increase production in more diversified wells. I think this is something that we always cared a lot, having diversification, not put all your money in only one asset. But for sure, those assets now they have a plan of putting capital, increasing production, and remember, as the oil infrastructure is ready, the paybacks and IRRs of these new investments, they are very quick. Mm-hmm. Remembering that in Papa-Terra, this is an asset that has almost 2 billion of oil in place, and a very small part of the oil has been recovered. If we look to main peers in Brazil, such as Peregrino from Equinor and other fields, they reach 20-25% of recovery factor. Papa-Terra is still in a very low range, less than 5%. So we do expect here, we should expect to reach those targets.
And also, if I understand this correctly, it sits in a vehicle of its own, an SPV, and then that SPV will take care of the capex. So there's no capital injection for you as a company into the assets.
I think we are. There's this. It's called 3R offshore, mm-hmm. And we are partners with 3R in this asset, which holds Papa-Terra and Peroá. And the intention here is that for the future capex, the SPV can be only funded, so either by cash generation or by debt from anticipation of oil sale. But we should expect that this SPV could carry the investments for the future inside its perimeter. Mm-hmm. Mm-hmm.
And looking at your cash position, you sit with 110 million in cash. You have another $55 million coming from the second installment of the sale of Maha Brazil. Is there any reason to expect that these 55 is at risk, or are they 100% certain?
No, 100% certain. It's not linked to any event. Mm-hmm. It's just a payment that was going to be disbursed in August, so yeah. No risk, not linked to any event.
Okay, so they come in August.
Yeah, if I'm not mistaken, August 5th or August 4th.
Okay. What are your thoughts with this cash position? How do you plan to deploy the cash?
So I think the company now with this new image with Papa-Terra and Peroá, we do have a cash flow, so we do have operational cash flow being generated, and we have this strong cash position that the idea is to pursue M&As. And why do we think we have this very good momentum? Because the world we are living a world with very high fixed interest rates, so the return for the equity is something that demands a very high return rate. So, and the investments in oil and gas, mainly in Latin America, for equity, they are still scarce. So we do believe that having equity for oil and gas in Latin America is very powerful. So we want to deploy this capital in projects that have robust cash flow dividends, robust reserves. The company here will not be pursuing exploratory assets. We want to look to assets that have book reserve, that have a history of production, and of course we want to use this money to get those assets to ramp up production with very accretive IRR. So this is the objective of the cash position. Use this cash to buy assets with production, with increase of production, and mainly that have cash flow streams, because we believe Maha should be a company that with a good capital structure and with good cash flow streams, so it can be enabled to distribute a dividend to its shareholder in those accretive deals.
And basically the reason why you can make good deals is the scarcity of funds and cash to buy the assets and to fund the assets, and that's where you can find good opportunities.
Of equity, correct. I think that is available, but in lots of assets in Brazil and Latin America, it's not easy to raise equity. So if you have equity, that will come. So I think us having this firepower to really be able to deploy some hundreds of millions of dollars in good assets puts Maha in a very good position to look for these opportunities.
And continuing on the cash question, what are your thoughts about dividends?
Yeah, a perfect question, Markus. I think the dividends, they should be the conclusion, the outcome of having Papa-Terra Peruá, of having deployed this cash in very good IRRs, so that the company is able to deliver good operational financial results, and with that implied, the company could be a dividend, a yield co that distributes dividends, but deploy this capital with good returns so that the company can distribute dividends in its time.
Continuing a little bit and moving away from Brazil and the cash and talking about Oman. So you also, in conjunction with the result, you also released the first test results of Mafraq in Oman. Tell us a little bit about the results.
No, perfect. We started the testing in March, sorry, and last week we disclosed the preliminary results of 4 wells. We tested Mafraq 9, Mafraq 7, Mafraq 8, and Mafraq 10, all of them in the alpha pad that we call. Aside from Mafraq 7 that we had some shut-in problems, the results, the preliminary rates of oil and water from these other 3 wells were encouraging. They had a first production that was interesting. Also, the water cut rates for those wells. We did have, however, a consideration to sort out that this oil had higher viscosity than originally expected. So they are being used some chemical and thermal treatments in order to meet the specifications that the facility that receives our oil attend. So we are at this moment using these treatments on our oil, so we can be able, hopefully within the next weeks, to offload this oil and really start the commercialization of this oil. So I think this is the first image we have from the tests. We expect within the next 45 days to release a new update for the 4 remaining wells, and hopefully already starting the commercialization and sale of this oil that is today stored in the field. So I think this is a little bit of the summary of what we have in Oman, where we should, by the next months, probably have some more final decisions on moving forward on the development.
Because when do you have to decide on the next phase?
In the next quarter.
In the next quarter, okay, okay. And then finally maybe the US assets. So you have LAK and you have the Illinois Basin. And I think you wrote in the press release that you expect the close of the LAK ranch during Q2. What is the thought with the Illinois Basin?
So regarding LAK, you're correct. We're pending closing still in this quarter. Regarding IB, we are evaluating the asset, and we do expect here to have an overview and decision of the asset in the very short term.
Okay. So if I summarize, we had DBO, which was just closed. You sit with a cash position which you plan to deploy in new transactions. You have Oman, where you just had some results, and we should expect more results within the coming 1 to 2 months, and then you have to make a decision during Q2 whether to move forward or not.
Q3, sorry.
During Q3, and then you are about to close LAK, and then we'll see what you're going to do with Illinois Basin.
Correct.
Sounds like there's a lot going on.
Yeah, I think we made a reshuffle of the company, and the focus here is really good capital structure, which we had a check with good cash position, assets with cash flow generation, and hopefully we are very intense here on the M&A activity to deploy this cash. I think the company with this, having deployed this cash within these interesting transactions, and the company will be in a position that becomes very cash flow generative. So if we look to the multiples, for instance, of DBO, of 0.2, 0.3 price to NAV, if we can replicate the same format with the cash we have, this is a company that really could have gross asset values of almost $1 billion. So, and the current gross asset values of the company are much higher than what the market is currently trading. So we're very enthusiastic with this new phase.
Paulo, thank you very much for coming here to talk to us, and thank you everyone for watching.
Thank you very much.